So Bitcoin's in a nosedive. And let's be real, this isn't just another dip. What we're seeing right now is a full-blown perfect storm. You've got pressure from inside the market, forces from the outside world, and this wild shift in who's even buying and selling. So let's get into it and break down what's really going on inside this crypto crash.
And I mean, just look at the scale of this thing. A staggering 95% of the top 500 altcoins are in the red. We're not talking about a few projects going under. This is a systemic bleed out across the entire crypto space. It's a sign of fear that honestly we haven't seen in a very, very long time.
And the financial hit? Oh, it's been fast and it has been absolutely brutal. In just one 24-hour window, over $19 billion just poof, vanished from leveraged positions. This kicked off what's called a liquidation cascade, which is basically a domino effect where forced sales trigger more forced sales, spiraling down and hitting 1.6 million traders along the way.
This has led analysts to pull out a pretty ominous term, the historical capitulation zone. That's the moment where everyone just gives up. They're not selling to take profits, they're selling just to get out. It is the textbook definition of extreme fear in the market. So to really get how we ended up here, let's start with the sheer scale of this sell-off.
All right, first up, let's actually put some hard numbers on the screen so we can wrap our heads around how deep this panic really goes.
You know, it's the speed of this drop that's really got people spooked. In just a little over a month, Bitcoin has cratered 22% from its peak. Just think about that for a second. Tens of billions of dollars in market value, gone.
And you can literally see this fear reflected in the market's mood. The crypto fear and greed index, which is kind of like the market's mood ring, has just plunged to 18. That signals a state of extreme fear. This isn't just investors playing it safe. This is a really deep, widespread pessimism that's taken over.
Okay, so what is happening under the hood? Let's peel back the layers and take a look at the forces inside the crypto market that are really pushing this thing down.
This is the most important question right now, isn't it? Is this just small-time investors panicking? Is it big institutions getting out? Well, let's break it down.
The selling pressure is really coming from four main groups. First, you've got the long-term holders, the OGs, who are finally taking some chips off the table. Second, all those new investors who just jumped in through ETFs are getting their first real taste of crypto volatility, and many don't like it. Third, traders using leverage are getting wiped out. And finally, you've got the whales, these massive accounts making big moves that send ripples everywhere.
And check out this number, because it's a big one. In just the past 30 days, long-term holders have moved 815,000 Bitcoin. To put that in perspective, that's the single biggest wave of this kind of selling we've seen since January. They are just flooding the market with supply.
And this right here, this is the new battleground for the entire market. The average buy-in price for all $59 billion in the US spot Bitcoin ETFs is just over 90 grand. As the real price gets closer and closer to that number, the risk of all these new ETF investors panicking and causing a massive wave of selling gets higher every single day.
Now, ground zero for this crash, it was the big centralized exchanges. Their automated systems just created this brutal domino effect. As the price fell, leveraged accounts were automatically sold off, which pushed the price down even further, which then triggered the next wave of sales. It's a vicious feedback loop that absolutely hammered the market.
Okay, let's get a little technical for a second, but stick with me because this is important. A lot of analysts are pointing to this classic bearish chart pattern. You see the first big peak? That's the head. Then it tries to rally again, but can't quite make it. That's the shoulder. The critical moment is step 3, when it breaks that support level, or the neckline. And according to this kind of analysis, that breakdown could signal that the price is heading way down, maybe even toward the $85,000 mark.
But, you know, this whole thing isn't happening in a crypto bubble. There are major events going on in the global economy and in geopolitics that are just pouring gasoline on this fire.
You've basically got the world's two biggest economies on a collision course. The US is trying to keep the dollar on top by supporting private blockchain tech while pushing back against the state-run digital dollar. At the exact same time, China is going full steam ahead with its own digital yuan, specifically to challenge the dollar. This clash of the titans is creating a ton of uncertainty for crypto investors everywhere.
And on top of all that, we have this perfect storm of economic headwinds. You've got renewed trade war fears, you've got less money flowing around the global system, and you've got Bitcoin still moving almost in lockstep with struggling tech stocks. All of these things are pushing investors away from anything that seems risky. And right now, that definitely includes crypto.
So, we've talked about the mechanics and the global forces,
But what about the people? Because there's this really fascinating split happening right now between who's buying and who's selling. Bitwise pointed out this great divergence that's happening. On one hand, you have the original crypto-native investors. These folks are feeling pretty beaten down and skeptical after everything with FTX and the meme coin craziness. But on the other hand, you've got this brand new wave of retail investors coming in from traditional finance, or TradFi, who are just now getting their feet wet through those new ETFs. This creates a completely unpredictable and fascinating dynamic in the market.
So with all that said, where do we go from here? For our final section, let's look at the two very, very different paths that crypto could take.
So it really feels like the market is standing at a fork in the road. The bearish case says the charts are pointing lower, there's a huge ETF sell-off risk, and the global economy is just going to keep weighing things down. But the bullish case, which folks like Bitwise's CIO are making, says this quiet period is actually a good thing. It prevents a massive bubble and allows this new wave of retail investors to build a solid foundation for a huge recovery in 2026.
Which brings us to the final, ultimate question. Is this crash the beginning of the end for this cycle? A total collapse driven by fear? Or is it a necessary reset, a painful but maybe healthy changing of the guard that's paving the way for a stronger, more sustainable future? The answer to that is going to define the next chapter for the entire crypto